The year 2023 begins with uncertainty for the stock market after a disastrous 2022. However, despite these bearish markets, Warren Buffett has remained consistent over time. As I told you in the previous video, Warren Buffett is considered the best investor in history, having a return of over 20%. Here I bring you the 5 main tips that Warren Buffett can give you to have a return equal to, or better than what he has had. So pay close attention, look for paper and pencil, as this will serve you for life. 1. Buffett emphasizes the importance of making intelligent decisions and focusing on what we understand, and is within our ability to evaluate, discarding those companies outside of it. We don't have to buy all the shares that are presented to us. We wait, look, and only when something appears that we understand and really like the price at which the stock is, then we can hit a home run. We don't need 100 correct decisions to become rich, we only need 1 or 2. 2. Better not to buy a stock if you are not sure. It is better to do nothing than to make a bad investment. Many times we feel pressured to invest thinking that we are missing an opportunity. It is better to wait, be patient, keep liquidity, and then take advantage of opportunities. 3. When you find those opportunities, then yes, buy strong. Generally, most opportunities appear in bearish markets. As Warren did in the 2008 crisis, and when he bought Coca-Cola in 1988, where he bought it 25% cheaper. He did it again in 2011 when he bought Bank of America after it fell 87%. 4. To invest, you must always be prepared, both economically and psychologically. We must be prepared for a decrease of our shares of up to 50% and still do nothing. Since we invest in the long term, and although the price of the shares may fall in the stock market, in the long term these companies, with a solid base, will go up. 5. Be patient. Buffett is known for being a long-term investor and recommends that investors be patient and not fall into the temptation of selling quickly in difficult times. Instead, focus on the fundamental companies and their long-term outlook. The stock market can be volatile in the short term, and there can be significant fluctuations in the price of stocks in a short period of time. However, in the long term, companies with solid fundamentals and a positive outlook tend to generate positive returns for shareholders. Therefore, if an investor has patience and holds their shares for the long term, it is likely that they will see a positive return in the future. In addition, by staying true to a long-term investment strategy, one can avoid emotions and impulsive decisions that can lead to losses. Instead of selling quickly in a bearish market, Buffett advises waiting patiently for the market to rise again, and thus take advantage of buying opportunities. These are the 5 tips that I bring you today, that I have been able to collect from several videos of Warren Buffett. But, if you have been observant, you have been able to notice 2 key words. 1. Long term. 2. Opportunities. Recommended book, The Intelligent Investor. Remember, your decisions, your results.